Hello. Uh, I'm Robert Lawrence, a professor at the Kennedy School. Let me first say that I'm really pleased to be able to appear before you today to talk about the US and Chinese trade relationship, and in particular how it is being affected by the current economic crisis. Let me start off by emphasizing that I feel that both the United States and China share a lot of common interests when it comes to international trade. We have common interests when we look at this in purely economic terms, and we have, I think, common interests when it comes to political considerations as well. Firstly, our trade patterns are extremely complementary. China is specialized in the production primarily of labor-intensive manufactured goods, and the United States is a major importer of these products. The US, for its part, is very competitive in agricultural products and in high technology products such as aircraft, and in services sector. So if you look at the patterns of trade, what you see is a very high degree of complementarity. Over the past decade, China has emerged as the world's most dynamic supplier of those labor-intensive products, and the United States has benefited from being able to buy the great variety of Chinese products at very good and competitive prices. Likewise, China's market is immense, and the opportunities to sell into the market has given American exporters great opportunities. So I would say from an economic standpoint, from the trade perspective, there is a lot of complementarity. I also think from a geopolitical viewpoint, we share a common interest in an open, rules-based multilateral trading system. This has been the objective of the United States for many decades, to construct a system which allows for American firms to interact in a global economy governed by the rule of law. And I think ever since China has joined the World Trade Organization, it has emerged as a major leader in this regard. So the bottom line is, we share a lot of common interests. However, it is also true that our relationship has been characterized by what some call significant imbalances. On the one hand, China has had a very high savings rate, and over the last few years had run very significant current account surpluses. The United States, by contrast, has been a major consumer. American spending has outpaced American incomes, and the US has recorded very significant trade deficits. And to make up the difference, we've seen a large amount of lending, particularly through Chinese accumulation of American government bonds. Now, in principle, people call these imbalances, but in fact, in a global system, it should be quite possible to have lending and borrowing. It turned out, in fact, that the weakness in the system was not the fact that the Chinese were lending or the Americans were borrowing, but rather the financial system, which was intermediating between the borrowers and lenders. What we've had is the emergence of a crisis, and what we've seen in response to the crisis has been a massive decline in demand throughout the world, and a plunging in world trade. World trade has fallen more rapidly over the last 6 months than it did in the first period of the Great Depression. It's to be expected when you think about it. There's been a sudden shock to demand. This has led inventories to build up, and people have cancelled their orders. In return, in response to this, what we've seen is industrial production plunging throughout the world and exports and imports falling very dramatically. If ever we needed a reminder of the degree to which our economies are all interdependent, it is the speed with which trade has really plummeted during this period. And I think because of global supply chains, because many of the exports which arrive in the United States have value added in China, but also intermediate inputs that come from many other Asian countries, the crisis has reverberated throughout the region. Now, in response, both of our economies and the leaders in our economies have implemented dramatic programs of fiscal stimulus. In my judgment, this is perfectly appropriate. China has a very impressive program designed to restore economic growth, and it looks like already it is paying results. Likewise, in the United States, President Obama has managed to persuade the Congress to implement a program of stimulus. So, to that degree, that we're also both taking measures, particularly to deal with some of the financial features of the crisis, especially in the United States, dramatic programs in terms of monetary policy and efforts to try to revitalize our financial system. But during this period, we face significant policy challenges with respect to international trade. When we look back at the Great Depression, historians still debate as to whether the growth in protectionism during that period actually caused the Great Depression. It probably didn't, but I think there's little doubt that it made matters far worse. And so both of our countries' major challenge in the immediate run with respect to trade is keeping global markets open. And to do this, it requires both domestic policies as well as international cooperation. With respect to the domestic policies, as both our governments move to implement fiscal stimulus, it is very critical that this spending not only fall on domestic producers, but also on foreign producers. We each have a responsibility not simply to stimulate our own economies, but to maintain open markets. And I think for the most part, the record is good, but in both of our countries, there are reasons for concern. In particular, at the state and local levels, both in the United States and in China, there is a strong temptation on the part of local policymakers to try to make sure that the dollars they spend disproportionately benefit workers in their own districts and at home rather than in the rest of the world. This is an area where we need a great vigilance because there are many countries in the world, particularly developing countries, who don't have the capacity to stimulate their own economies and are therefore highly dependent on international trade. A second major area relates to our abilities to cooperate with one another. And there, both of us have assumed very important roles in the G20 process. When it comes to international trade, G20 statements have expressed, I think, the right kind of sentiments, with both countries joining others in voicing a determination to resist taking protectionist measures and acknowledging that at times these might well be taken, but calling on international organizations like the World Trade Organization and like the World Bank to shame and blame, to point out where countries have backtracked on these pledges and commitments. The WTO has done this so far, and there's evidence in many countries of some kinds of measures, but fortunately so far these appear to have been modest. The most important area, I think, in which we can collaborate and cooperate would be in bringing the Doha round to a speedy conclusion. I think it was very unfortunate last July that the negotiators were unable to reach a conclusion. I think there's blame to go round on both sides, but in my judgment, I was very disappointed when China and India together rejected the efforts to try to achieve a round. As I say, I think the United States too deserves some of the blame, but I think today the single most important thing that our global leaders could do to signal that they remain committed to an open world economy would in fact be to speedily conclude the Doha round. A lot of work has been done. Many results are actually already virtually accomplished. The agriculture area is one which continues to need some more progress, but I think that's where the top priority should lie among us, between the two countries. Over the medium term, the challenges are also significant because what we're going to have to see is a restructuring of the patterns of economic growth, both in China and in the United States. And in fact, they have to be mirror images of one another. In the case of the US, we need an increase in our national savings rate. We need to rely less on foreign savings and more savings generated by Americans. This is likely to happen because of the destruction of wealth in the United States is going to force Americans to save more. Demographic forces are also going to lead to pressures on America to increase its national savings rate, both privately and through the government sector. And it's going to mean that from an American standpoint, we're going to become more dependent on exports and export performance. By contrast, I think in China, you have had a very, very high savings rate, and that is likely to have to be adjusted. The government can run bigger deficits on the one hand. Private savings can fall so that consumers can enjoy more of the fruits of their labor. That's going to mean more internally driven growth and a much lower amount of growth, relatively speaking, dependent on exports. This is also going to cause major adjustments in the Asian economies, who've also become very dependent on their sales to China, particularly of electronics intermediates that have been sold in the rest of the world. So we're going to have to see significant adjustments. But I still think it means that China will continue to be a very important source of growth for many exporters throughout the world. A successful infrastructure in China is going to increase the demand for capital goods. An increase in consumption in China will increase the demand for imported consumer durables like automobiles and other kinds of products. And increased spending in China is likely to increase the demand for primary commodity producers. So to the degree that Americans can be competitive in those sectors, there are immense opportunities. So that's basically how I feel we need to respond. In the short run, the need is actually to maintain economic stimulus in our economies and to be vigilant that this is done in a way that does not increase economic protectionism. But over the medium to long run, the vital changes in the structure of our spending patterns I see as the major challenge. But let me conclude by saying, as I started off, that I think we share a common interest in an open, market-based global economy We need to construct a world in which countries can continue to maintain the degree of global integration which we've seen has provided significant benefits. And I hope that our two countries will work together to construct a multilaterally based system that is based on those principles. Thank you for your attention. I'm really sorry that I couldn't be with you in person. Goodbye.